analysis. So in your section B, guys, in section B, you have management accounting. That is not company accounting, but that is management accounting, from which you'd be asked questions, and that section B carries total 20 marks. ये भी no, not even financial statements is over. We yet have to do the questions of financial statements. But my focus as of now is to make you understand this chapter, right? So, guys, in management accounting, you have analysis of financial statements. This is what you have, guys. I repeat, in section B, you have analysis of financial statements, where you have total 4 chapters, which are nothing but are the 4 different tools of analysis of financial statements. Now, guys, listen to me. Financial statements are broadly are statement of profit and loss and balance sheet. In case of public limited companies, these statements are available for public. Anyone can see financial statements of a public limited company. So you can see the financial statements of Reliance Industries, Infosys, Tata Consultancy Services, right? Eicher Motors, Tata Motors, and many such public limited companies. State Bank of India, their financial statements are available on their website. Financial statements means statement of profit and loss and balance sheet for a year. Now let's say you are an investor. You want to invest in any of the companies, in shares of any of the companies. But before that, you want to understand which company is good for investment. And for that, you must know tools of analysis or tools of analyzing financial statements. Please do not write anything, guys. Right? And there are many tools to analyze financial statements, guys. This skill or this knowledge is highly paid. If you have ever watched a CNBC channel, which is dedicated for investment only, which is all about managing one's money, right from the morning, you will find many analysts coming there and giving you tips that today you should purchase this share or you should sell this share. And they do this, they give the tips based on the analysis of financial statements only. I hope you have understood what I said, guys. Right? So, financial statements include statement of profit and loss and balance sheet, just by reading them, one may not understand everything that he wants to make a decision to invest in or invest out or remain invested. So you are an investor, you want to invest in a company, that decision you want to make, and for that you need to analyze financial statements of that company. Or you have already invested in a company, now you want to see whether your investment is safe or not. Should you continue investing in that company or not? or you should take out your investment by selling shares of that company. For that also you need to analyze financial statements of that company. If you want to stay there, if you want to remain invested, for that also you need to analyze financial statements so that you could assure that yes, this company is good where you have invested and it's good to continue with this company. So these three decisions usually are taken by investors, and these decisions are based on a wise analysis of financial statements. I hope you all are understanding this, guys. Right? Apart from investors, there are many other stakeholders who also analyze financial statements of companies or businesses, companies or other business enterprises for various purposes as below. So apart from investors, who are those who are interested in knowing more about financials of a business or a company are suppliers. And what do they want to know? They want to know liquidity position of the company. So suppose I am a supplier of a company and I supply goods to a company. Obviously, the supply to a company would be on credit. No company will pay me cash on supply. So I allow them credit. Now I want to know whether I should continue with that company or not. Isn't it a sinking ship? If it is, then I should stop supplying to that company, because if I supply more, I have more risk of losing my money. And for that, I would like to know liquidity position of that company. That is how liquid that company is as far as payment with suppliers and to meet its expenses are concerned. I hope guys you're understanding this. Employees, to know growth and stability. Employees are interested to know whether their job is stable or not. If the company itself is not stable, obviously they will soon lose their jobs. Apart from stability, they also want to know whether the company has prospects to grow further or not. Because if the company grows, all employees' salaries and their position will also grow. Have you got me, guys, or not? Lenders, to know, they want to know solvency position of the business, of the borrowing business. Means the business who has borrowed money from these lenders, what is the solvency position of that business? That is, whether that business can pay in long term principal and interest to the lenders or not. So banks, financial institutions, they always check solvency position of business before giving any loan to them. I hope guys you have understood why analysis of financial statements is important. Yes or no? I'm asking guys all, are you understanding this or not?
Yes, sir.
Yes, sir.
There are various tools of analyzing financial statements. Some of them are part of the curriculum as below. So these are the chapters, guys, that you have. And these are nothing but they are tools of analyzing financial statements. One is comparative statements, other is common size statements, third one is ratio analysis, and fourth is cash flow analysis. So these four chapters you have in section B. Out of that, you would be asked some questions, and out of those questions, you have to attempt the questions so that you could score 100% out of section B, that is 20 marks. You know that section B would be of 20 marks. Section A, in which you have partnership accounting and company accounting, that would be of 60 marks. So 60 plus 20, 80, and for remaining 20, you will have your project and viva. So as of now, guys, I'm starting with ratio analysis because this you'll be using for your projects. So note down this much, guys, first, and then we go ahead. Yes, guys, noted on everything, right? Okay, guys, what is ratio? I'm asking you. What is a ratio? We have seen about ratio in partnership, right? So, what do you understand by a ratio? Fully fatabat. Ratio is for what? Sorry? To distribute something, right? Ratio is the one purpose of ratio is to distribute. But even though it is not to distribute, what do you understand by a ratio? Forget about its use. Forget its use. Use is for distribution, right? But other than that, if we do not have to distribute and I tell you a ratio, what do you understand by that? A ratio is a fraction of two numbers. For example, ratio of 25 and 15 is 25 divided by 15 is equal to 5 divided by 3, that is 5 is to 3. This you all understand, guys. I do not, you do not require any explanation, right? Ratio is used or is also used for comparison. For example, if income of A and B are rupees 10,000 and rupees 8,000 respectively, the ratio of their incomes is 10,000 is to 8,000. That is how much? 5,000 is to 4,000. That is 5 is to 4. That is 1.25. It means income of A is 1.25 times of that of B. So this is how, guys, we are comparing income of the two by using this ratio. Have you got this, guys, or not all? I'm asking all, guys. Anish, Mancha, Manveer, Tanmay.
Yes, sir.
Yes, sir.
Guys, seems all of your energy has drained out. You are sitting without any energy,
Nothing
guys.
mind.
Please do not do this, guys. I hope you all have got this, right? I'm asking again.
Yes, sir.
Okay.
Yes, sir.
So, guys, the use of ratio is also to compare the two numbers, and that is what exactly we will do in this chapter. Rishti, have you understood this, what I just explained? Right? Another example, population of two cities A and B is 25,000 and 75,000 respectively. Their ratio is 25 is to 75 is equal to 1 is to 3 is equal to 0.33. It means population of city A is 0.33 times that of B. Have you got this, guys, or not? Or population of A is 33.33 percentage. How I got that? 0.33 into 100. The fractional value that I got here that I have multiplied with 100, and this is how I got 33.33% that of B. right? Here also we can do so. Or income of A is 125%, that is 1.25 into 100 that of B. This also, guys, we will do in this chapter. So some ratios, most of the ratios you have to calculate in fractional form, but some you also have to calculate in percentage form. What is the meaning of that? Whether it is a fraction or a percentage, that I have already explained you guys. Is it clear to all or not? Marks of A and B in accountancy out of 100 are 80 and 60 respectively. It means marks of A are 1.33 times that of B, or marks of A are 133% that of B, or marks of A are 33% more than what B scored. I hope you have got this, guys. If yes, note down this, guys, all. So, what I just explained you here, guys, is not restricted only to accounting and ratio analysis, but it is used many places. So, yes. This is 133.33. This is there, guys. THEIR. Well, guys, how and why ratios are used for analysis purpose? Let's understand this with an example. Once the meeting gets over, you have to log in, re-log in for another 10-15 minutes. We do not have any class after that today. Let's say there are two companies A and B, and you want to invest in any of the two companies. The annual sales of company A is rupees 10 lakhs and that of B is rupees 8 lakhs, which you get to know from statement of P&L of the two companies. Which company would you like to invest? A, right? Right, guys? Obviously, one would like to invest in the one which has more sales. Now you also check the profits in the statement of P&L. So profits of company A is 1 lakh and profits of company B is 90,000, right? But if you analyze the two together by taking their ratio, I have used your ratio with percentage, guys, in percentage way, which I have already explained you here. First, I calculated the fraction of the two numbers. This is the fraction. And then I multiplied that with 100. So percentage of profit on sales of company A is 10%. 1 lakh divided by 10 lakhs into 100. That is, net profit is 10% of sales. But here it is more than 10%. Here it is, this is 8 lakhs, guys. I'm sorry, huh? 8 lakhs. That is 11.25%. Now, which company you would like to invest in? B. Why? तो क्या हुआ? What is the meaning of that? It means, guys, on every 100 rupees of sales, company B earns profit of rupees 11, whereas company A earns profit of only rupees 10. This is the meaning of this percentage, guys, what we have calculated. I repeat, on sales of every rupees 100, company A earns profit of 10, but company B earns profit of rupees 11.25. It means profit margins are more in the products of company B than company A. So guys, that's it. We will tomorrow in our next class we'll start from liquidity ratios. Got me, guys, all?